Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Let's get back into that Palantir story. I got some flow to show you today that gives you some insight into how the top 1% operate. Let's take a look. Okay, we start at the home page. I'm going to 100 results. I'm going to take out the spreads. I want to see things greater than 2 weeks. I usually click on here. There's some interesting stuff going on here. ATVI, 2 days in a row on these 79 puts. Vodafone, multiple days in a row here into 10 calls. Ford calls. You see them coming back for some of these as the stock is finally up one day here. But I also I go back and I start looking at anything I see here, just in pure size, whether it's for sale or to buy. So after I do the buyers, I'm just looking around and I see this Palantir March. By now, you know, I like a little bit further out, gives me more indication of thought by the top 1%. And I see 7,000 of the March 12 puts on the bid side here. On the bid side, stock is now down 74 cents. We had a trader alert last week with the stock near 17-ish where someone was buying the 16 puts. So I want to take a look at this again and see what's going on here. So you have here Palantir today, August 17th, expiration August 18th. That's just this week, tomorrow. That's just a lot of day trading in and out of stuff. And then you have here March $12 puts, 7,000. Now, again, these are the most active strikes by sorted by volume. Down here, I get the top individual trades by blocks. So in this case, there was a 7,000 block trade of March 12 puts, 135 on the bid. Looks like it was sold. Looks like it was sold. Okay. Looks like it was sold. And it was crossed 7,000 times opening, and definitely an opening trade. Now, so let's go back to August 8th. And if we get rid of these expirations and start from here, we saw these, the November 16 puts, and 10,000 at a clip. There were 12,000 traded on the day. And they traded right here near the morning. So I wanted to get more information on that. And so I went to the new options chain, August 8th. We are looking at the November options. November right here. Here we are. The R dollar was around, at the time we had it around 12-ish or so. They paid around $2 for these. Right. Let's see what they paid here. Right. So they paid around 2.05. Okay. So 2.205. And we had the R dollar around 12, which was indicating we set at 11 and a half. 11 and a half. We also said that the buyer of these puts was likely, it was the day after earnings, he was likely covering a short and getting into these puts. And so if we look at the chart, here's a weekly. Okay, so quick glance at the weekly just to figure out what we're looking at here. First thing first, we talked about somewhere around here. 20 is where it stopped up here. Okay, but you see there's some history there where you have here, and this area right here. Okay, and then it broke on a big day, straight down, and then we met it back here. Okay, at the end of the day, this thing looks like it's trying to do this, to be honest. Looks like it's trying to make that turn. Takes a while for these things to make turns, but you have this curvature, up, and starts turning here. Okay, starts turning. Well, it was going this way, but now it looks like maybe it's gonna kind of do something like this or something like this over here first. Okay, so let's take a look at that. Again, these lines don't have to be perfect. I'm just trying to show you sort of what we're looking at. Okay, so you have this thing trying to turn, likely trying to get back to here. Okay, that's what it looks like. The chart is trying to long-term turn around and get back. However, earnings came out and the stock has been down. Now let's take a look, because we're looking a little bit closer in time. Let's take a look at the dailies. Okay, the daily chart. All right, so a little clearer here. We had our 21 range, and where's my annotate? So we said that my inclination was that he was short into the number. He was short into the number, which was probably around here or so. short into the number. He came in to buy puts. He came in to buy puts at around here. Sorry, here, 17. Okay. Came in at around 17 to buy puts. We were saying that the indication was he was looking at 11 to 11 and a half, which coincided to this sort of spike here. And if you go further back, you can see there's some history there. So this is sort of the map we presented last week. He shorted up here. He covered his short. So let's just write that in there. So he shorted up here. He covered short and bought puts. Right around the 17. We were at maybe just above 17 at the time last week. Okay. And so he buys puts there. Now the new options chain indicated that he was targeting 11 to 11 and a half. Today we see the 12 puts being sold. Let's check that again here. We're seeing the 12 puts being sold at $1.35. So your break even there is 10.65, meaning he's got to buy it at 10.65. This is a week later, and he's selling these now at $1.35. So he paid $2 for the 16 puts in November. He's selling these now at $1.35. So net, he's long the 16-12 calendar put spread here, long the Novembers, short the March for 65 cents, which isn't bad. He took out probably $2.5 here, got into puts November. November has the next earnings, so that's good for him. Okay, that'll maintain a bid. And like we said, he sees value in this range. He's actually saying, okay, 12 minus 135 gets me to 1065. I'm a buyer at 1065. I can do that. That's right at the 200 day, you see. By the time this cuts to November, that would be to 200 days. So he's okay selling those March 12s. What he's trying to do is essentially take his premium, take his money off the table. Now he has a 4-point put spread at 65 cents where he actually wants to buy the stock probably at, sub 12. So there you have it. That's a perfect scenario where we can read the tape. It's likely that this player who has come in 1 week after buying these puts to sell these, we indicated he was a buyer at around 11 to 11 and a half. He's showing you here that by selling the 12 puts, he's taking in $1.35, which gets you on a break even to 10.65. He's showing you that he's a buyer right around there. So this is the area 10 and a half to 11 and a half where you should likely see buyers. It coincides with some of the volume that you see here, big volume, and then it just took off, and there was good volume here. But this area is likely the spot where you're going to see buyers. And I would anticipate if it got even below 11 that you start seeing call buyers setting up for earning, where they'll probably look for another move back towards 16, 17. Remember, the last thing I said was that it's likely to stay in this range for a while because, again, we're looking at a 50-day move like this. We're looking at a 200-day looking like this. And remember, I'm telling you that I think these have to somehow come together. By coming together, it's essentially, this is a large move, 7 to 20. That's a large move. This is not a small stock. This is, call it $35 billion stock. So this large move needs to be digested. And I suspect that you will see a range, let's call it 11, 10 and a half, 11 to 17 and a half, 18 over the course of the next, maybe the next 5, 6 months. You could see it sort of up and down trading, but let's see what happens here. I think this shows you how they manage that risk reward. Find the area where they are buyers of the stock and take their money off the table while maintaining a short position on the earnings. So for 65 cents, you can't beat that. That's it. All right. Have a good weekend. I'll see you back on Monday. Make sure you smash that like button, comment, ask questions. I'll talk to you later.